GroCapital Financial Services, a proprietary, a wholly owned subsidiary of AFGRI Operations, has sold its debtors book to the Land and Agricultural Development Bank of South Africa after approval from the Competition Commission. Chris Venter, the CEO of AFGRI, joins us to discuss this slightly further. Thank you so much, Chris, for joining us today. As I mentioned, you have sold off your debtors book. We know that it's the size, the overall facility is 2.4 billion rand. We know that what was utilized was 1.886 billion rand. Is that what you've sold off? The actual debt within that book?
Yes, we're selling off the debt as we stand today is just under 1.5 billion. At year-end June this year it was at 1.8, and obviously the total facility. So that this period now is the lowest part normally before the farmers start to plant. So we expect it to go up to over 2 billion before February next year.
So essentially you've sold this portion off. As you mentioned, you could see more demand coming through, and this is going to put you in a far better position because it actually reduces your gearing by around 40%. Are you planning to hit that 2.4 billion rand cap going forward by this time next year?
Yeah, we do, but I think it's more the process. You know, for us the focus was to make sure that we deleverage our balance sheet and actually allow us to focus more on investments going forward. Obviously the relationship with Land Bank and with their support, it does allow us to actually grow the financing for the farmers. So it is a positive the way that we look at it for the farmers, because we can continue to expand the financing for them. And it's also very positive for AFGRI in the sense that we deleverage the balance sheet, and it will allow us to grow and invest more in the years to come.
Chris, are you planning to embark on this relationship going forward with Land Bank, where you do sell off the debt that you accumulate constantly, perhaps on an annual basis?
Well, we will do it in future. We will probably do it on a daily basis. Land Bank is a very close partner of us and has been for the last 10, 15 years. So, you know, we have a good relationship with them. We trust the management team that's there. And it's certainly something that we will work with them to expand, not only for the farmers but also emerging farmers. So it's a big positive, I think, all around for the farmers, for us and for Land Bank. But yeah, definitely it is something that we will continue to do in future, and we will continue to look at ways to expand the book for them.
Chris, of course, we know that the agricultural sector is very cyclical and very risky and dangerous in a sense because it really relies on climate. Give us an indication of the risk that you take on when you do embark on loans and assisting farmers.
Look, what will happen now in the future, obviously, is we will continue to play an administrative role and a credit role for Land Bank. Land Bank will actually be the owner of the underlying asset and underlying debt, and that relationship will allow us to obviously expand the book. So going forward, our risk at AFGRI will be more an administrative risk, and you know, making sure that we can perform under the administrative duties that we assume in the agreement.
So in other words, Land Bank obviously then taking on the risk. Tell us a little bit more about non-performing loans. I mean, I mentioned the 1.886 billion rand, and then currently the amount is down to around 1.4 billion rand, which you alluded to. Are you saying that farmers right now are able to pay their loans and they are in a very comfortable position? You haven't seen any defaults coming through?
No, I mean, the farmers are actually in a good position. We've had a very good price increase, commodity price increase that they have experienced over the last 12 months. A year ago, the prices were sitting around 1,200 rand a ton. At the moment, it's over 2,000 rand a ton, 2,200 rand a ton. So for the farmers, it's actually very good news. We do hope that they have a good rainy season coming, and they're entering the planting season as well. And as on the back of that, they will continue to do well.
Chris, if you could just reiterate the amount that the book is worth and the amount that you sold it for. So in other words, you are sitting in a comfortable position where you didn't make a loss on what you sold the debtors book for to Land Bank?
Not at all. No, we're selling it at face value. The amount that you look at, the facility amount is 2.4. In other words, that's the amount that the farmer can take up. The amount as it was at our financial year end in June was 1.886. And the amount now at the beginning of the new planting season is 1.4. So obviously, as the farmers start to plant and they start to draw money to buy the inputs, that 1.44 has the ability to go up to 2.4, and that's really what we're saying. So it's like having a home loan, but it's not fully utilized, less at the moment, and it will increase as they utilize it.